Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I can hear you loud and clear. And Happy New Year, Coach Jay, and to all our At the Buzzer viewers.
Happy New Year to the buzzer beaters. Happy New Year to you as well, Coach Paul. Welcome to At the Buzzer, a market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. I said my New Year's resolution was to change this introduction, but we're creatures of habit. I'm Coach Jay, been a Topstep performance coach since June of 2023, trading for the past 13 years in the futures markets for the past now 7 years. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, some knowledge, and hopefully help you become a better trader.
So if you are all our chat, our audience, Coach Paul is definitely a G, says M's in the chat. And thank you for joining us. Thank you for joining us. Welcome to another year on TopstepTV, another year of trading, first trading day of the year. Hopefully everybody had a good start to the year. Let us know how you did. Were you up on the day, down on the day, anything that you learned from the day, any New Year's resolutions that you are starting off really well, or do you just take today as another trading day? Good to see you all here. We'll get into the markets. As far as news goes, not a whole lot on the calendar. Pretty quiet news day. We'll start to see that pick up towards the beginning of next week as some of the volume comes back in, traders come back to their desks. So pretty quiet on the news front. Anything you want to talk about on the news, Coach Paul?
But there's one interesting news bit that I thought stood out was Trump backing away or delaying some tariffs on furniture. Whether that grows, I found that interesting. That came on the first day of the year, trading day of the year. So maybe there'll be more of that, the unexpected. But other than that, no big news that I saw.
No big news. Let's take a look at the quote board. We have 36 different markets we can trade with Topstep accounts today. To the downside, we had soybean meal down 1.17%, lean hogs down 1.23%, and natural gas, our biggest percentage mover to the downside, down 1.33%. To the upside, we had micro Bitcoin up 2.7%, micro Ethereum up 5.11%, and platinum, our biggest percentage mover to the upside, up 5.28%. To talk about our big four, we had the crude oil market down 0.23%, the S&P up 0.15%, gold down 0.05%, and the Nasdaq down 0.25%. When you look at the trading day, it did not look like 0.25% move to the downside. It was tale of 2 sessions, the overnight session and the regular trading hour session, New York session. Completely different markets here. I got a Nasdaq chart up here right now. Let's take a look at the weekly in the Nasdaq. It is Friday. Today does not feel like Friday. Remember, traders, there is no trading day tomorrow. Even if today felt like a Monday, it is Friday. What are you seeing on the weekly here, Coach Paul?
In the range. We've been in this range since Thanksgiving, and we're staying in it. Still, the trend is up, although we are finding flattening out near all-time highs beginning of the year. Other than that, I would call that a neutral weekly chart.
Very neutral. I would agree. It's been that way for a little while, right? We've just been in this range. I think every week since we've printed this October 10th candle, we've traded in that price. It's been 63 trading days, 63 calendar days since we made an all-time high in the Nasdaq. Very range bound, very range bound. Let's take a look at the daily. And we talked about this one during the opening call, but do we see price acceptance back inside that October 10th candle? 25,635 is that price as the high. And we saw a pretty nice rejection up there. Anything different on the daily you see here, Coach Paul?
One thing in the Nasdaq, we finished under the 50-day moving average.
Yes, we did.
And the 20 and the 50 is crossed. We've been under both of those for 2 days now. and we firmly rejected this morning with volume. So on a daily, we're starting to show a little weakness. Can we read too much of his best volume we've had in a week? So a little puncture in the armor of the bulls. So
Yeah.
showing some weakness here with those moving averages and this sideways movement on a weekly. It really needs to pick up some buying soon, beginning like next week, or I think we could start building some downward momentum.
Agreed. Agreed. We are. I interesting that you said that. We've had 8 trading days with below average volume. We get back into holiday seasons are finally behind us. Today's a weird one because you got the one day for the week, but it's nice to see some volume come back into these markets for sure. Nice aggressive sell off today. Let's take a look at the 30-minute chart. Hey, new year, same us. What is that white line on this chart? What is that white line? That is, if you're a new viewer, the 200 moving average on the 30-minute. This white line is going to be a level that we talk about in every market that we talk about today. Shout out to Coach Paul for this one, putting it on my chart. We've been talking about it for years. And sometimes it presents an opportunity. Really nice trade last night. We had some urgency. Looking for the definition of urgency, this is it. Right? We established the first 30-minute range. We had price close outside that range, volume trying to leave as well. And within 3 30-minute candles, we had VWAP leaving the range, and that looked like it had the potential to be the trend all day, except for the fact that we ran into this 200 moving average. And it's such a key level on the 30-minute chart, is specifically the one we're looking at here. That the market's response to this tells us a lot. And we had price trade above it, Coach Paul, at some point today.
Yeah, we had price, but not volume. Well, when I say volume, it was light volume. It floated up. And VWAP. What did VWAP do? When volume, New York volume, when you had to show your cards,
Yeah.
it had a sharp reversal early, but when we talk about volume, we're looking at that VWAP. It was not convinced on a volume basis above the 200, and boy, did it fail.
Yes, it did. Yes, it did. Turned around pretty hard there. We talked about this one during the opening call, right? The price and volume overnight inventory, you'll hear us say this during the opening call, was long, right? The entire overnight session was pretty much a buy. But what Coach Paul just said is really important. This 30-minute candle here, the opening 30-minute candle, is probably more volume than the entire overnight session in that 30 minutes alone, right? So when that volume comes in, it can do one of two things. It could agree with where price is and continue to trade higher, or it can say, hey, you know what? I don't like where we are, and we're going to reconcile that overnight inventory. And today, that's what we saw, right? Saw a ton of selling coming in right off the open. That 200 moving average, and we're going to try to do something a little bit different here. You guys let us know if you like this or not. I'm going to try to go a little bit more in detail for the trades that I took today. Just going over levels where we had executions and things like that. Not going to try to cherry pick only winning trades. I did have a winning day today, but trying to show where the executions happen in all of this, right? So I took a few trades today in the Nasdaq. Just pull up the executions here. All right, so we have the New York session open, and I'm going to switch this over to regular trading hours only because we know what we were looking for up there at those highs. But we have regular trading hours only, and I kind of preempted this first one. We looked up towards that 200 moving average, right? The 200 moving average at the time was up at 25,714. And on this initial candle, it looked like exactly what I was looking for initially, right? We said if price traded above the 200 moving average, but volume didn't, I was going to go short, right? Something I said during the opening call. But on a price basis alone, the market traded above that 200 moving average. I didn't get the short up here. Kind of hesitated a little bit. These are 3-minute candles, and I took my first short at 25,671. You can see where the risk was on this trade. It was risking about 40 points, which was 2 times the ATR. I took this on a 1-minute chart. 2 times the 1-minute ATR, so risking about 40 points. And I took this trade off for 7 points. And why did I take this trade off? Because I got in it and I said, this isn't doing what you expect it to do. It confirmed one part of it, right? It confirmed that volume and price did not want to trade above the 200 moving average, but it didn't confirm that there was an actual move going to the downside. So I took this trade off for pretty much a scratch. Happy I did that because we bounced and traded back up 140 points to another level that we talked about during the opening call and said, if this is going to push in an area of rejection, and you can, rewatch the opening call, we talked about 25 800s. Coach Paul, you remember what was happening at this time. My dog had a stomach ache today.
Dogs got to go.
Right.
You got to move them.
My dog had a stomach ache, so we had to go outside. Right. I said it to Coach Paul. I think I want to sell it up near 800s when we get there. Took the dog out around this time. We reject at 800s, and the market turns around from there. Jojo, you asked the question. You risked 40 points to make 7. I took this trade off for a scratch because it did not validate what I was seeing. Right. And when we show these executions, right, one of the things that I think is important is to say what I was looking for and did the market confirm it. I'm keenly aware that when we show some of these executions, there's going to be a lot of questions about them. And for most parts, I'm going to try to have an answer. I have an answer for why there's a 3-lot short here, and you can see that trade got taken off for a scratch as well. So we'll explain that. But we had the rejection up here at the 800s. Coach Paul, go ahead.
One thing I would ask you, did you preempt on that sell?
Yes, 100%. 100%. There's a couple of those today. And that's one of the things, and I think we both talked about it, one of the things where I know what I'm looking for in the market, but if I try to get in before the market is ready, that's cost. I've reviewed my trades from 2025. That cost me a lot of money, right? And it's not to say that I'm trying to avoid a loss, but I'd rather take the trades when the market's confirming what I'm looking for, right? Because that just puts the odds in my favor a little bit better. And in this case, we saw the market like this, and it looked like it was going to go, but if we look at where VWAP was, it was a flat line. So I'm hoping the market is going to confirm what I'm seeing instead of actually waiting for it to confirm what I'm seeing.
Hope and prediction.
Correct.
Hope, we've talked about as a 4-letter word. Prediction is you're not trading in the present, right? You're trading in the future.
Correct.
In your mind. And that's one of my contentions for improvement this year is to get away from that. Like that preemption, and the preemption, to be specific, is that VWAP is going to break out of the range.
Right.
And it doesn't.
Right.
So if you can recognize that you're preempting or predicting, get out.
Right.
I just get out, whether, because we're so, as traders, we can be very trigger happy.
100%.
And I don't know if anyone in the audience has suffered from that, but it's a pretty common thing for traders, especially in a day trade. You're looking for opportunity, don't want to wait. If you catch yourself doing that, and we've reviewed some trading in the last 3 months, it's like that preemption, prediction, jumping in front.
Gets me in trouble.
So part of what I'm doing, my mindset is to improve my internal operating system.
Okay.
I'm gonna be a robot.
There you go.
I'm glad you brought that up, because if you've never done that, good. But I would say almost every trader I know, that happens.
Yep.
So a scratch or a small loss, recognizing that you're jumping in front and hoping that word hope comes up,
Oh yeah,
and just get out and wait.
100%. Then we got something interesting up at these highs. Like I said, I went out, had to take care of some stuff, but we got first J trade of the year on the 3-minute here in the Nasdaq. So what we're looking at, this candle right here at these highs that tagged that 800 level, right? Big fat round numbers, psych level. We got the highest volume candle maybe on the day outside of the open. Yeah, highest volume candle outside of the open. And we get in here, and I see somebody who said this in the chat: missed my core setup and got FOMO, then got trigger happy and hit my personal loss limit. This is like in the dictionary for trades that I should be taking, and I wasn't there to take it. I'm going to be honest, I was not happy about it. That's a 300-point sell-off from an area that I was looking to sell, and I don't know that I would have sold exactly at 800s, but somewhere in this area, right? I came back to the markets when they were back under VWAP, back in this opening range, where, again, back to being patient. I have to be extremely patient here and not try to force something because of the risk to reward. Again, VWAP was still pretty much a flat line at this point. There's nothing guaranteeing that this market was going to continue to sell off here. But it looked great. It looked great. And if I can get the entry up at 800s, awesome, right? I don't have anything to think about. I'd probably take the trade off somewhere through the opening range. But if I think there's more room lower, then I have to wait. So you can see from the time I thought I should be in the trade to the time I actually took another one was 51 minutes. And that's kind of tough to do, especially when you see the market doing exactly what you wanted it to do. Go ahead, Coach Paul.
What kind of trade did we have up there? I'll ask the audience.
What kind of trade?
Outside the opening.
Yep.
Highest volume, new highs of the day. And we have a reversal. What is that trade?
What is this trade?
And we look at it a lot here, except it's usually not on the buy.
We always see it to the other side. Who has the name? The J trade, Courtney.
Yep. It is Courtney.
And Dan C, that 10 a.m. reversal, yeah, 10 a.m. Eastern time. Shout out to, I know a couple traders that look at that, right? Looking at that 10 a.m. reversal. But we had the volume up here. We closed below that volume. We never looked above it, right? I actually think we rejected right at 50% of it. Yeah. We held the 50% of it. And this is a great trade to take, again, if you're there. But I'm not there. So I missed it. Not going to get upset at my dog. He's probably upset at me for feeding him something that upset his stomach, but I have to now wait. And here's the second trade on the Nasdaq. Second trade on the Nasdaq, we had some more volume that came in. You can see I have this purple box now marked out as a potential area of rejection. And I want to talk again about preempting trades. Give me 1 second here. Move that over like that. All right, so we have this area. In chat, you guys let me know if you like us breaking down these trades this way. Now what I'm looking at, we had the J trade from the high. We have volume finally leaving the opening range to the downside. And we closed the gap. We closed the regular trading hour gap, but volume is leaving to the downside. So I do want to get short. I see some selling that came in here. You can see I have mapped out this purple candle here. And let me check the executions off. One of the things I said to Coach Paul, I think we were on, I said, if the Nasdaq gets up to 600s, I think that looks like a potential area of rejection. Because of this candle that we saw here, 600 was in that zone. It was close to VWAP, but if you look at where my trade was, we had a VWAP from that high volume, which was at 525. Took a trade at 525. Got in short. What does that trade do? Stops me out for 40 points, right? Where, what did I say before I took this trade? If we reject at 600s, that's where I want to be in short. Where did the market trade up to? This high of this candle is 25,604 half. So if I go with my initial thought of the rejection of 600s, where this high volume is, this is almost a no drawdown trade. But taking the one, preempting this trade, trying to find a reason to get in, and I'll be honest, that's what that trade was, trying to find a reason to get in. That cost me 40 points. Now, if I wasn't already up on the day, that may have been my only trade of the day. But 2 examples here of waiting for a level that you predefine and then allowing the market to validate that information that you're seeing. If it never validates it, then there's no trade, right? But in this case, we push up to the 600s. I say, okay, this is where I should have gotten short, and then got in short 25,560. My risk gets to go now above that area, potential area of rejection, right? So waiting here, this is another 6 minutes before I'm getting into the trade because I took this preemptive trade, and now we get to trade to the downside. Yeah, I got in early, and Coach Paul, you were using a word all day while we were trading, rotation. And
Yeah.
this market was in a downtrend all day, but talk to us about what you were seeing in those rotations.
Well, if we go back to the half hour, now, first of all, we have the J trade at the top.
Mhm.
Failed buying. And then with VWAP not leaving the range, we broke the first half hour's range.
Right.
That low. And we had from the half hour, we had urgency, or we had bad buying. Now remember, we rejected the 200 moving average with the volume, but that half hour bar doesn't do justice in the short term.
Right.
So if we look from what time we broke that level, 40, that 640 level.
Yeah, let's take a look. Yeah, here we go, right here.
So it doesn't, nothing goes straight down. We had movement back and forth, and that's what I'm talking. But it doesn't, from the J trade. Where did we go to?
Yeah.
That's what I mean, rotation. To me, I visualize that as the VWAP, and from that point, being the algorithm.
Mm.
So looking, if you're short and you have a target you haven't reached yet, and that's what we're talking about, you get what I call the fire scarecrow.
Yeah.
Like,
right.
Ooh, should have got out. Oh, it's never gonna stop. This winner's gonna turn into a scratch or a loser, and all those fears.
Correct.
Now, one of the things looking from there is going back, looking at volume as VWAP. All right. If it closes above it, I got new information.
Right.
If not, I'm in rotation. Because rotation that's emotional heat.
Right.
We don't like, it's like, oh no, darn, if I'd have just bought down there, then I could sell again, and all these other things that in your mind. But understanding rotation, that's from if you're short. If you're long, using this information, close above that VWAP from the high.
Correct.
Then I've got a new, what I'll call opening, and you can frame out your risk better. So all that trading, and this is where VWAP becomes very effective.
From
the low of that move to the swing up to the VWAP, how many?
147 points.
And the average true range was?
At the time, at this swing low was 47 on the 3 minute. So that's about almost 4 ATRs away.
Yep.
Get your entries.
That's
close
a
to
big
volume.
move.
Yeah, it is.
Now, if it doesn't hit your target, you're going to have to suffer through that. So you have to understand that at that point, 4 ATRs, and you fail at the at the VWAP, maybe that's another place when people are talking to add.
Correct.
Like, because you don't have much room there. You can risk one ATR up there against the VWAP because you're leaning against the flow of sellers.
100%.
But one of the things is to understand that rotation and how it affects your decision making. And
Yeah.
this point, that was hard. When we were talking, it's like, oh man, this is
Yeah.
what are you dealing with? The unknown.
Yep. Yeah. And
And
I
when
think,
you,
yeah, go ahead.
and when you're doing that, you're leveraged against fear. It heightens that. And so reading the flow, we've heard it all the time, but this is one way to understand the flow.
100%. So, you know, biggest takeaway, and we said it here, right? I sold this here based on price alone and not volume. We get the pull up to volume, then I get short. You can see a couple executions here, right? I got short a 3-lot. You can see that I took that trade off for a scratch. I did not intend to take a 3-lot there. Now, it would have worked out really, really well, but that's not the risk that I was willing to take on this trade. So I scratched it immediately and then got into the right position size, which was a 1-lot, which if this trade didn't work out, then I'm completely fine with. If this trade worked out, and here's where, again, back to execution, it was an accidental trade to take a 3-lot. If it worked out and I celebrate that, that's negative reinforcement. Because if it doesn't work out and that's not risk that I was truly willing to take, then I'm playing a very dangerous game, right? So I had to get out of this trade, get back in at a worse price, but actually the trade that I wanted to take, which was short at 1-lot, because I'm comfortable with that risk. And then you can see where I took the trade off, 25,491s. These were accidental trades as well. I was on air trading, split focus, right? I'm supposed to be driving a segment. I thought I was getting in long the S&P. I got in long the Nasdaq. They worked out, but I cut those trades immediately because lack of focus. What is this showing? Why am I showing these executions? If I'm split focus and not focused on what I'm doing, there are potential mistakes. Those mistakes can cost you. The best way to have those mistakes not cost you is to get the F out of the trade as soon as you realize you made a mistake. So here's a mistake here, taking a 3-lot instead of a 1. There's a mistake here, buying the Nasdaq instead of buying the S&P. Making quick decisions to get out of those trades is important. Don't be the accidental trader. I've heard Hogue say that a bunch of times. Just had to get out. Did you feel like maybe you were outside of your comfort zone or maybe doing stuff at the house plus the dog? No. I mean, at this point, the dog was fine, right? The trade I missed was the trade up at the highs. But here, I'm just, I see the flow and I saw what I thought had a high probability of happening. I just didn't wait for it to happen. And that's why I got in earlier. All right, but there we go on the Nasdaq. A little bit of a trade breakdown. We're not going to do that with every market that we look at, but let us know in the chat if you like those type of breakdowns. We'll try to do them a couple of times a week, just a little bit more in depth. We talk about our strategy a lot, but showing the execution of the strategy, I think, can help. A lot of times people ask, hey, where would you get in? Where would you get out? You guys can see I didn't get perfect entries on any of these trades. And I don't know that I want to try to get perfect entries. I want to identify the flow and then get in the flow of the market and go from there. Anything else you want to add to the Nasdaq, Coach Paul?
No, that would be it. Other than we did the trade breakdown, nothing to add.
Awesome. All right, let's take a look. Any other equity markets we want to take a look at? Do we want to go to the metals here?
Well, let's just look at the S&P. Was a little different, but once again, VWAP did not get above the 200 on the 30-minute.
Yeah, price didn't even get up there.
The price did not get up there, but essentially the same principles. So that's where I would leave it.
Yeah, 100%, right? We said that 200 moving average was going to be important in pretty much every market we look at. We can see it in the S&P. We didn't even get up there, and price and volume didn't. Let's take a look at the Dow. That'll be an interesting watch for tomorrow against that 200 moving average, and we'll take a look at the Russell interesting watch for tomorrow as well in the Russell here. All right, let's take a look at gold now. Literally every market that we watch.
Wait, I thought we already looked at the S&P.
It looks exactly
Oh,
the
that's
same.
gold.
Let's take a look at the weekly on gold first. What are you seeing here on the weekly?
This is interesting. That's the biggest fail we've seen since that low, that correction low.
Yep.
We finished lower on the week and below last week's low. Sign of weakness. Technically, that's not healthy.
No.
So let's look at a trend line from that most recent low. Yeah, the one you just had. Yeah, we're right on it. Let's keep that on there for next week. I think this week's low is going to be pretty key in next week.
Yeah, it is.
Especially on this little rally. It's kind of heavy.
Yes, it is. Take a look at the daily. We had that aggressive sell-off day. Is this now another candle that we have to anchor to for the next 2 months? It looks very similar to the October 21st candle, right? Where it's the candle that brought us away from the all-time high. A decent amount of volume trading there. And that was the biggest point, one of the biggest point-wise moves intraday that we've seen in gold ever. Sitting right at that trend line. Let's see what happens. I think this candle is really important. 50% of it, 44, 48, 70. And why do we look at 50%? It's because the market looks at 50%. You can see from the last one, we rejected once, twice, 3 times before we traded above that 50%. Go back to April of 2025. 1, 2, 3, 4, 5 rejections before we got above that 50% of that candle. I'm looking at this candle as that same idea here.
It's literally the same structure.
Yep.
Off of all-time highs, and we had that engulfing candle. 50%, we haven't even challenged it. We're up against the move, that trend line that's on the daily and the weekly. Next week is going to be a fun week. There's going to be some opportunity, in my opinion.
Man, going into the whole, today felt like Monday. I'm like, oh man, I can't wait to trade tomorrow. And it's like, wait, you got 2 days, you got another weekend right in the middle of the week, it feels like. But yeah, next week is going to be a good one for sure. Take a look at the 30-minute. Very similar chart, right? Very similar chart. I mean, do we really have to belabor this point? This was the same trade in almost every market that we traded. We bought it off the open, urgency early. I saw someone in the chat say that the Shanghai metal exchanges were closed this week. I don't know if it's closed for next week as well. We may see lower volume during that Shanghai time. But urgency early. Price visits that 200 moving average on the 30-minute, above that 4,400. But look at where VWAP stopped. Big fat round numbers, right? 4,400. What does price do? It advertises above. What does volume do? It never even attempts to trade above that. So this is a lot of thin air up here for buyers. And when that volume comes in for the open for gold, shout out to the house account taking the opening range trade. Simple execution, right? Simple execution of this trade. Gold opens up at 8:20 Eastern time, 7:20 Central. The next 1 minute candle, this is urgency to the downside. The next 1 minute candle left that range to the downside. And we never looked back. Look how many rejections we have off this view up from this opening range. But context matters, right? What was happening up here? We had that 200 moving average. We were above 4,400. And VWAP for the day was not following price. Then that's when you get the reversion trade and more volume coming in. And that volume said, we're selling it. And just a really nice trade. I don't even know where we ended up closing that trade, but it was a really good one.
Yeah, I think this is going to be a theme coming into 2026, and U.S. Open, Shanghai Open, in the metals, especially silver. There's a difference in price between Beijing silver and U.S. silver. And as we enter into their export limits in silver.
Yeah.
It's diverging. So I'm not just seeing that U.S. Open. That's COMEX,
Mm.
and they came out
Yeah.
without they didn't wait. It was like
Not at
here,
all.
and here's some more.
It's a huge opening range.
Yeah, that left immediately.
Yep.
So what is that? The algorithm's telling us there was a big seller on the open, and then they had more to a market that couldn't take it.
Right.
But interesting that came right on the COMEX Open, because we've been watching. Sometimes you don't even know COMEX is
Right.
open. This is a little different. I don't know if that's a theme, but it's something I'm going to be watching in 2026.
Stuff. Really nice selling there. And again, house count. So execution of this one really quick. We took one micro because of the risk of this trade, right? The risk goes on the other side, and it was a $10 opening range. JD said it. I can afford to take one. If we get a pull up into the range, then maybe I'll add. But where we had to take the trade was about 15 points of risk almost, because we were risking, give it a little bit of space on the other side of the opening range. Executing the trade with the contract size, and similar to that 3 lot that I accidentally put on the Nasdaq, had to switch to a 1. Executing with the contract size, sizing is so important with all of these trades, right? You could have the perfect idea, a natural fluctuation of the market with over leverage stops you out of the trade before it eventually does exactly what you were looking for. So focusing on sizing for sure. Take a look at silver. We know a lot of people are trading silver right now. Silver, in my opinion, needs to hold this candles low.
What will we get if that doesn't hold? If we close below that,
Potentially,
we got a J trade on a day.
Yeah.
With at all-time high with that engulfing candle. Interestingly, margins at the COMEX for silver went to $30,000.
Gotta have 30,000 just to play.
You want to keep it, and that's once again, there's this friction now going on between COMEX and Shanghai. And as we break down the early trade, interesting. This is important area. That could be a blow off top. Everybody was, I don't know, over the holiday was talking about silver that I met like,
Yeah.
and that's
not normal.
That's not normal. That's a red flag.
Right.
So, and like I said, I think next week is going to be some huge opportunity.
Yeah. I agree with you there. Let's take a look at silver on a shorter time frame. Friend in the chat says most of my trades have been to the downside in silver, and there's opportunity to the downside in silver right now. There's opportunity kind of on both sides right now. It is a big market, so just be careful trading it. But there's opportunity on both sides for sure. Here's the I'm on a 3-minute chart here, but here's the first 3 minutes of silver's range. That is a $1.25 range. That's huge. Is pretty big. I did
it's take huge on a micro.
Yeah, it is. I did take a silver trade today as well. Did get in long right around here on this little bit of a pullback. There was some buying that happened here on the open, and if you split this wick, right around 50% is where I was getting in long here. My stop below it, and just looking for a breakout. The one thing I know about silver is if I see profit, I am not letting the market take it back.
Yeah, well, it's a bit.
You're
compressing that risk.
Yeah. I want to take, if it's a Russell trade, if it's a Nasdaq trade, an S&P trade, I'll give it a little bit of space to work, and it draw down against me. In silver, I want to take the risk off the table as early as possible, just because it is a pretty aggressive market right now. Really nice push in the overnight session, very similar to the other markets that we've talked about. But what is that white line?
Wow. Played around with it.
What is that white line? The 200 moving average, again, we said it, right? Almost every market that we look at is going to respond to that 200 moving average today. Silver might be the best example of it.
One other thing too, Coach, I mean, we played with that 200 moving average all night last night.
Yep.
Well, it's interesting when Globex opened up, 8 o'clock, it rejected it. Then we had, look at the volume, the second half an hour. Oh, what you were talking at that
Oh, yeah.
time.
Yep.
Now that volume, it's either, it can be a J trade or continuation.
Mm-hmm.
And as soon as we broke that low, the selling picked up. The volume did, but the price break picked up.
Yeah.
And it never recovered from there.
No, it didn't.
So whether someone entity watches us at the buzzer and the 200 moving average,
Hit the like button if you do.
if it hit the like button. But that was a stunning example of that 200. I mean, they had such a great rally. It looked like it was going to go to 80 again.
It did. Yeah. It
but
did.
The buying just stopped.
Price advertises higher, volume doesn't. That's a sign of weakness. A sign of weakness. Price advertising higher, volume doesn't. Is there always going to be a trade here? There isn't. Do you just blind short it up here? You could, if you know where your risk is. But I think even in this case, once that volume starts to pick up and go the other way, that's really a sign that, okay, no one else wants to buy this here. And that 200 moving average was right at that $74 level. It's a really nice trade there in silver. All right. Any other markets we want to talk about, Coach Paul?
What was it? Oh, trade of the day.
Okay.
Feeder cattle.
Cattle.
Watch this, baby.
Oh, wow.
Feeder cattle. 3 minute.
Coach Hoop knew it. Wow.
Talk about urgency. Maybe feeder cattle is the new silver. There's a classic example of urgency, and that was a huge move.
Yeah. This is cattle's up, what, almost 2% on the day?
Yeah.
It's a nice move. That is a nice move for sure. Oh.
No, unfortunately, I did not bank that. I wasn't watching. I was trading something else.
Yeah.
I did see later on the half hour, I didn't want to take the risk. It was, by the way, most people really, I bring this up to show you an example of urgency. I don't think many people can afford the risk here. So just when it broke out, new risk, new lows, that's about a $400 trade on a 3 minute.
Right. Pretty expensive.
But I think they should have mini cattle like the ones you see in the mini farm. It's a big contract, but that is a classic example of urgency.
We got a question here from Kyron. Can you explain how you guys use the ATR? 100%. So let's take this trade, right? We are looking for an opening range breakout trade. And let's say that my rules for the opening range breakout trade is I need a candle close outside the range in order to take the trade. So that means the first candle close we had outside this range is up here. Let's say that's where I got in long. Right? I don't wait for a pullback or anything. I just get in long here. This ATR value at the time I'm taking this trade, and I'm on a 3 minute chart, right? 3 minute is my execution time frame. I'm on a 3 minute chart. What is the ATR? It's kind of hiding behind my head here, but it is 28 cents. Right?
2.8. Yeah.
2.8. So what's 2 times that value? It's 54.
Yeah.
Nope. Is it 54? 56?
Yeah. In that area. I
56.
just make it easy, 60.
60. 60. All right. So you see this value, right? So the 14 that you see right there, that's the number of candles that it's looking at. So it's looking at the past 14 candles. And then this value right here is the actual price amount, right? So you'll see that change on the Nasdaq, and as I hover over the candles, it'll change. So the way I'm using it, shout out to Coach Paul for this suggestion, is 2 times that value is my stop. Right? So that's where if that's my entry, that's where the stop goes. This is not, hey, I only want to lose $100 on this trade. It's based on the market fluctuation on the time frame that I'm taking the chart. Where should my stop go to allow the average movement of the market to play out? The other side of this is looking for, Coach Paul, 2-to-1s are great for day trades.
And how much was that?
What was this? $1.20?
Yep.
It's a pretty nice move. Pretty nice move. I hear you guys talking about a variety of factors before getting into a trade. How long did it take for you guys to come to this second nature? I think it's an ongoing process. I think it's an ongoing process. Go ahead, Coach Paul.
Longer than I wished.
Yeah.
Yeah.
Right.
And once again, we talk about preempting. We just talked today about preempting. It's so easy to preempt this trade.
Yeah.
Because we don't, but being, what it took a long time was being disciplined.
Mm-hmm.
Discipline is your destiny. In
Yeah.
trading, if you don't have discipline, you get randomized. So it took longer, but now that I see it, it really becomes a routine.
Mm-hmm.
We look for, like I said, we look for this in different markets. I was not watching this. Just I was busy with Nasdaq and made a bad trade in Bitcoin. But the idea is the structure. This is a structure we look at. Understanding that, okay, we made a low on the opening, we're breaking out, VWAP is up. You could wait for VWAP to leave the range. But key point is now you have a plan, not a feeling.
Yep.
And that really took a long time. I feel this is going to go versus having a plan and then waiting for it to execute the plan.
100%. I think I'm trying to answer that question too. I agree with Coach Paul. It took a lot longer than I wish it would have taken, and part of that is just me being stubborn. Being stubborn and not being patient and throwing temper tantrums when the market doesn't do exactly what I want it to do right away and things like that. Getting through all of that, right? And Sergio, yes, using the ATR to place the stop, right? 2 times that ATR value on whatever time frame you're taking the trade. In this case, it's a 3-minute, so 2 times the value of the ATR on the 3-minute. All right, we didn't look at crude oil. Another one. What is that white line? I'm not saying anything else. That's enough. Go ahead. Go ahead, Coach Paul.
It was interesting. They all had that same pattern.
Every single market.
If we just a line chart up to the 200, fail hard. Crude, Nasdaq, S&P, silver, gold. I don't know why, but that's a pattern we've seen time and again.
I think they, whoever's trading these markets may have taken some notes on at the buzzer over last year. Maybe I'm not going to say that. Nope. Nope. Hey, if you're watching, hit the thumbs up. We appreciate you being here. Like and subscribe.
Please.
Tell your friends and family too as well. We're just here to provide information. Nothing we say here is for trading or investment advice. It's for educational purposes only. And if you educated yourself on what we're doing here, hit that thumbs up button. Any other markets you want to talk about, Coach Paul?
I don't have another one really. I think we covered them well.
Yeah.
I would leave this time if we're any questions.
Yep.
If not, it's Friday and some people are still nursing a hangover.
Let us know if you have any questions for us. Hopefully everybody enjoyed the New Year celebrations. If you did anything, for me, I went out to dinner and then I was in the house, watched the ball drop, and went to sleep. But let me know if you guys have any questions. If not, we can wrap it there. Great start to the year. Thank you for joining us as always. We expect some volume to probably come back in the markets next week. Today was a good sign of that in the equities for sure. But I think that might be it.
All
Coach
right.
Paul. Anything you want to say before we go?
So, yeah, Happy New Year. Focus on your operating system. It really boils down to executing a trading plan and plan that, get good at that, and we will see you again next week. Have a great weekend.
Awesome stuff. Thank you for that, Coach Paul. I believe Coach Hoop is still doing his class at 6 p.m. Eastern time. And then after that, enjoy your weekends, everybody. Got a review. After that, enjoy some time off the charts. We'll be back next Monday. See you all then. Anne-Marie kicking off the week with the Sunday kickoff here on YouTube. Have a good weekend, everybody.
Have a good weekend.
Bye.
Bye.